On seeing the thumbnail of this video, you may ask me, is Patel Engineering a multibagger? Well, actually, I have no idea. Okay, I'm sorry, guys. The thumbnail was a clickbait. It was rage bait. I have no idea if Patel Engineering is a multibagger or not. But I'm not even sebi registered, so I can't even tell you if it's a good investment or not. But what I can do is represent the facts, represent some data, and you can then figure out if you want to invest or not. And that's your choice. And I hope you do some safe investing. So be safe. And let's start. So we have Patel Engineering, 3,122 crore rupees is the current market cap. The current price is 37 rupees. That's like less than 4 10 rupee kurkures. The book value, that is, uh, sorry, assets minus liabilities is the book value. So book value per share is 44.8 rupees. So the net assets per share you're getting is more than the price of the current price of one share. So it's trading at a very big discount to book value. Book value 44.8 rupees. That's like more than 4 10 rupee kurkures. A return on equity, I believe last year's was 10%, and return on capital employed, we can see 15.3%. So it's all right. Nothing exceptional, nothing that bad. Stock PE, very nice. 8.9%, 8.9, sorry, 8.9 times is the PE ratio, price to earnings ratio. So is it a multi-bagger? Again, I have no idea. But why am I interested? Is that things seem to have changed for this company in the last few years. And let's see this. So first, you're wondering, what is this chart? This is the price of its shares, okay? So where we come at around 2008, straight up 2008. Yeah, so you can see 2006, the price of one share was like 330 rupees. And we come to 2007, it's like peaking. 2008 is peaking, like 700 rupees, 658 rupees. In 2000, and what is it's 2009 and it's 342. The last peak is the last of the good days. And then onwards, it's a downward slide basically. Here you can see the price basically crashed post 2010, like 23 rupees in July 2013. In 2016, it's 35, 33, very low. Then these look like the dark ages. Uh, Here we see 7, 9 rupees per share, uh, 13 rupees per share. Okay, but in last few years, it's not that bad. Here's the last few years. Let me zoom in. The last 10 years, basically, and it's been at a bit of not a resurgence, but higher than before. It clearly higher than before. So 14 rupees in March 2023, and then surged up to 63 rupees in 24, and currently we saw it's 38 or something. This was the price of the share. Let's look at the sales of Patel Engineering. Oh, first of all, it's a construction company. If you didn't know, it's a construction engineering company. That's what it does. Okay, we're gonna look at the sales. On these blue things, the blue bars you see, these are the sales, the quarterly sales. Let me zoom in, make this a bit more clearer so you all can see, make myself smaller. Yes. So, for example, here we are at March 2009, 964.99 crores in sales. Very nice figure. You can see here also March 2006, 363 crores. So around 2011, okay, 2011, you come to 2011, and it peaks 1,573 crores in one quarter. It peaks, the sales have peaked. And then 2011, we come all the way to like, let me see here, okay, 2020. The 2011, 2020, it has just struggled. The revenue has gone down, profitability has gone down. This is green line, this like green line. Yeah, the green line shows the net profit margins. So you can see the revenue gone down, and the profits have gone down. But post 2020, okay, post 2020, and it's a resurgence. Look at this. The company has basically resurged. Revenue, the blue bars, bars have gone up. The revenue has gone up. You can see the green line. The green line has also gone up. So more green, it's always better. We always like green. Yeah, revenue has gone up, and even profits have gone up. And it's always good to see that. If you want to see this more in numbers wise and more accurate numbers, here we go on screener. Now this is the profit and loss for the last around 10 years, basically 11 years now. Here we can see the sales from each year, the operating profit. So I will click on here, and you see these percentages below the sales growth. Here you can see minus 10% in 2014, minus 7% in 2015, 18% 2016. Wow. 2017, 2018, both minus numbers. 2019, very small growth. 2020, it's starting to come up back up maybe 10%, but then COVID happens 23%. Not a good time to be a Patel investor. Hearts go out, prayers go out for the Patel gang. Still hoping for the stock to come back to its glory days. But now, post 2021, we see 2022, 69% growth. Of course, the COVID slump down and the resurgence after COVID helped with this, but 2023, 15%, 2024, 16%, and 2025, 12%. You see this black number, you see this 733, that's the operating profit. And the percentage below it, that's the operating margin. So operating margin is like 16%, 14%, 15%, very consistent. And management said that they expect profit margins, EBITDA margin here, operating profit margins to remain around 14, 15%, so around the same range. Then you see 733, yeah, 733 crores, that's EBITDA or operating profit. Here you can see it's also experiencing a very, very nice rise. One more thing, the management said that for fiscal year 2026, they don't expect any growth in revenue, either stable revenues or flat revenues, due to not being an essential problem with the business, but some timing problem. So they took some, I guess, construction projects and they are now shifted by 1 year. So all that's going to happen, simply speaking, is that in 2026, there's going to be stable revenues or very low growth. But from 2027 onwards, they will have more growth. So to the OG Patel investors, if you didn't know this, good to know this. Yeah. If you expect 2026 to be a growth year, even management said it won't be a growth year. So moving on, what else can we see for this stock? Okay, one thing we can see, very important. Okay, you see this interest, yeah, like 438 crores. All these numbers are in crores, by the way. All these numbers. You see this operating profit, 467 crores. Operating profit divided by interest gives us the interest coverage ratio. And if it's more than one, it's good. If it's slightly more than one, okay. If it's like four, five, that's amazing. That's not amazing. That's very nice. So higher the interest coverage ratio, it's better for the company. Now, thing is, the interest or the money they're paying to the money they're paying on loans as interest on their borrowings, right? You can see here. So in 2025, sorry, 2015, the interest is more than operating profit. The black line operating profit, interest is more. Here we can see next year is 2016. It's more. Next year, it's more. It's barely more here. Slightly more. Here you can see barely more. Here we can see. I think that's COVID. Not COVID. That's not COVID. Here we can see it's more. So interest is repeatedly more than operating profit, and this can be a alarm. This can be an alarm that if the operating profit is less than interest that you have to pay on your loans, if it's too low, there's a chance you may actually miss out on your interest payments, you may default, and that's obviously not a good look for like investors at to default. But 2020 and 2021 and 2022 onwards, let's see this. Interest 420 crores, operating EBITDA 530 crores. Move on, look at this. In 2024, 690 crores EBITDA, only 360 crores of interest. So the latest year, we see 322 crores of interest, 733. It's two times. It's more than two times. They did it. They finally did it. They made money. Interest coverage is now more than two, and it's increasing. See, the interest coverage seems to be increasing. So the more it increases, the higher it becomes. This ratio, the interest coverage ratio, higher is the operating profit than the interest payments. It's better. It's better. So we saw the revenue is growing. No, the company is becoming better at paying off its interest. So now, like defaulting on interest, defaulting on its loans may become a smaller issue. I'm not saying it will, but more positive. It's a more positive sign now. So what to see now? Now you can see this. You'll be wondering, what is this? What is this? Why is this video so badly edited? So this is the investor presentations. Companies release this all the time, and they're useful. If you want to invest in a company and you want to know more about it, you can always go in the investor presentations. You can search this on Google and all that. On Screener also. On Screener, on the document section, we have this, but this is the latest investor presentations, and you can get some very useful things from it. So on page 7, we have some key facts about this company. Okay, 7 decades experience. Okay, they have constructed, I believe, 300 kilometers of tunnels. Very nice. 5.5 lakhs of acres irrigated. So maybe some of their engineering and construction projects related to irrigation of lands. 1,200 plus kilometers roads. Okay, 15,000 megawatts of hydro projects. 15 states. Okay, wow. So we have tunnels here, we have roads here, we have irrigation here, and we have hydro projects. Very nice. Another thing that you would be interested in is the consolidated balance sheet. This is the latest. And of course, there are a lot of things you can see here. And all of this is in millions of rupees, not in crores anymore. So one thing I would like to show you all is this, the total current assets. Current assets are assets which can be converted into cash within 1 year. So you can see that's around 64 million. 64 million, 64,782 million rupees is the current assets. And the total current liabilities are 41,140 million. So current assets are more than current liabilities. And when we divide current assets by current liabilities, that gives us the current ratio. And higher the current ratio, it's usually better. So we can see current ratio is more than one. Uh, yeah, sizable difference between the current assets and current liability. That's always good to see. And of course, majority of current assets you can see is inventory. I think that's pretty typical for a construction company. Cash and cash equivalents of 4,048 million rupees. I think that's 404 crores. Always good to see. I hope it's 404 crores. I hope it's not 40. I don't know the crores to million ones. Okay, moving on, moving on. We have the very strange, yes, the long-term ratings. So what ratings are these? These are the credit ratings. Ratings given by credit rating agencies. We have Infomerics, I guess very respected credit rating agency in India, India Ratings. So two very respected credit rating agencies in India have given this company a A minus rating, and A minus is actually a pretty nice rating as far as I know. Stable, the outlook seems to be stable, and we can see the long-term improvement So it was B plus in 2021, B, triple B minus, that's actually an improvement over B plus. Then we have 2023, triple B, then 2024, triple B plus, and 2025, A minus. The highest, I believe, is triple A. I think it's triple A. So it's going towards higher and higher ratings, and higher the rating, the better it is. So that's always nice to see. Moving on, page 34, we have the order book. Basically, the total number of orders it has, or the projects, the future it has. Here you can see 66% of its orders. Again, one thing to say, its total order book is around 15,200 crore rupees is the total order book. So keep that in mind. So 66% of that total order book is hydroelectric projects. So hydroelectric projects seem to be its major revenue driver for now. 22.96% is irrigation. Okay, okay. Then we have tunnels, 7.73%, and roads, very small, 1.9%, and others, very important, 1.2%. Okay. So hydroelectric seems to be the major thing, major revenue bringer. Very interesting. Followed by irrigation. Sort of waterworks, it seems. Then revenue by client. Who is the client? 66% is by the central government or the central, okay, and or by the PSUs, the public sector units. Um, Here we can see the state government departments contributing 32%, and the other 4% must be some other clients, maybe private, who knows. Then very important, order book by project completion. So what percentage of order book is at what percentage of being completed? So here we can see, okay, the total number of projects, 48, order book value. I believe that's 15,200 crores. So around 9 projects with order book value remaining of 8,431 million rupees is with 90 to 100% categories, 90 to 100% completed. The majority are in here. We have the 30 to 50% completed category, representing around 54,448 million rupees, I believe so, order book value. Then 10 to 30%, the second highest, 33,462 million rupees. Here you can see the 30 to 50% makes up 35% of the total order book value. 50 to 70% makes up 17.44%, and 10 to 30% makes up around 21.99%. So it seems that majority of its order book won't be completed, but it's in a good stage of completion. A lot of work is being given. So I think that's it. That's all I had to show. I guess we can show this thing, order book breakup by geography. So where are the projects being completed in which states? Here we can see Jammu and Kashmir is the number one actually. You can see the project values 43,456 million or 4,345 crore rupees. Madhya Pradesh is second largest. Then we have Himachal Pradesh. Then we have, who's the fourth one? Maharashtra, of course. It's Maharashtra. So overall, um, yeah, that's it, I guess. That's it. Is it a multi-bagger? Who knows? I have no idea. One more thing we can see is cash flow from operating activities. Make myself smaller. Cash flow from operating activities, a very nice metric, underrated maybe. I don't know. You guys can tell me. So a good start here. Minus 130, minus 100 and minus 100, minus 362 crores is the 2014. If you go to the recent years, it's pretty good. It's not that bad actually. The cash flow from operating activities. 363 crores, 25, 688 crores, 702 crores, um, 514 crores. So very, very high numbers. At least it's positive in the cash flow from operations category. At least it's positive. And I guess that's it. So a lot of cash flows. The debt situation, debt is becoming less and less of an issue. I think so. I'm not SEBI registered. And that's it. So have a nice day. Bye.